We talked about, Brendan just talking about commodity prices definitely far from their peaks, but they are already starting to climb back toward them. And let's bring in Michael, who can kind of tell us about that part of the story. We're talking a lot about the rise in commodities today.
That's right. I mean, the story here is the easiest way to sow the seeds of a bull market is just not to make it worth someone's economic while to produce something. We see this in agricultural markets, low prices in corn or wheat or soybeans. They sow the seeds of a bull market because farmers, they shift away from lower paying crops to ones that pay a little bit better, and then there just isn't a lot of corn around. And look at the action today. I mean, you threw a dart at the board today. Everything was green here. CRB highest level in 6 weeks. Copper at a 10-month high. Coffee at a 7-week high. We saw sugar up more than 50 points today. Broad-based rally on the back of a weaker dollar here, and some good news on the data from the ISM data in the U.S. to the PMI out of China. All the news was good, and the commodities followed suit.
Not to mention that the rally in stocks, Michael, really seems to be feeding the rally in commodities here.
That's exactly what's going on here. And it's a really excellent point. Take a look at this graphic here. It shows you the correlation between the CRB, that's the benchmark, the broadest basket of commodities here, and the S&P index. You can see this correlation here. It's a whopping 0.9, which is a massive correlation. It tells you that when people are coming back, they're looking for risk assets in every class, whether that be commodities or whether that be equities. They're coming in, they're buying everything.
All right, so $1 billion question is, I mean, can we expect this to last? Can prices go even higher here? What are you hearing?
Well, I mean, it's already being priced in. If you look at a lot of these commodities that have very developed forward curves, you're already seeing that. Take a look at this little metric here. You can see what these markets are doing in the forwards. You can see crude oil here, $7.50 for the September 2010 contract. Right. You can see in nat gas, it's a whopping $2.25 per MMBTU. These are next year's prices. They're already pricing this in. The market thinks we're already there.
Got it. Great to know. Hey, Michael, thank you so much. Michael, wait.